Welcome back to Stock Explorers. Today we're going deep on
Tempus AI.
Tempus AI. Right?
Yeah.
You'll see it as T on the ticker.
Yeah.
So we are digging into their recent SEC filings
Uh-huh.
to really get a handle on what's going on with this company
For sure.
that's aiming to personalize medicine using AI.
Right.
And, these filings,
Yeah.
these SEC filings, they're like a company's financial diary.
Uh-huh.
No sugarcoating, just the raw numbers
Yeah.
and strategic insights.
It's a good way to look at it.
It is,
Yeah.
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 What's interesting is that while there's, so much hype around AI and healthcare,
Right.
these filings offer a really grounded view of how Tempus AI is actually performing
Yeah.
and where they're placing their bets.
Exactly. And so Tempus AI wants to combine some serious healthcare expertise
Sure.
with powerful technology to tailor treatments.
Yeah.
But their filings show this really interesting contrast.
Okay.
They've been racking up net losses since they started,
Okay.
yet they just went public on the NASDAQ.
Yeah. And that seems a bit counterintuitive.
Yeah, it does. It highlights that difference between short-term financials and long-term vision.
Right.
Tempus AI had an accumulated deficit
Yeah.
of $2.1 billion as of June 30, 2024.
Which is
Yeah,
a hefty figure.
for sure a hefty figure.
Yeah.
But going public suggests investors see a potential there that outweighs the current lack of profitability.
Right.
They're buying into the story of what Tempus AI could become.
Yeah, so they're swinging for the fences,
Mhm.
but that doesn't mean they're not facing pressure.
Right.
Their term loan facility has some pretty strict revenue requirements.
Oh, okay.
$459.1 million for 2024.
Uh-huh.
Then jumping to $594.1 million in 2025.
Wow.
Are those even realistic goals?
Well, I mean, it points to a very aggressive growth strategy,
Right.
almost a grow-at-all-costs mentality.
Right.
To hit those targets, they'll need to significantly ramp up their revenue
Yeah,
and likely secure some big deals.
for sure.
So it really begs the question, where will this growth come from?
Well, so their revenue streams are split into
Yeah.
genomics and data and services.
Mm-hmm.
Is one carrying the team right now?
Right.
Or are they both pulling their weight?
Well, while genomics seems to be the more mature revenue source,
Okay.
data and services is showing signs of accelerating growth.
Interesting.
So that might be where Tempus AI sees their future.
Okay.
Especially given all the, buzz around AI and data in healthcare these days.
Right. But their filings also lay out a bunch of potential risks.
Sure.
And some are pretty unique. Totally.
These disclosures can tell us a lot about their perceived vulnerabilities and how they're planning to mitigate them.
Yeah, one that jumped out at me was their dependence on Eric Levkowski,
Okay.
their CEO, founder, and chairman.
Uh-huh.
They even mentioned a cybersecurity incident at Lightbank, a venture capital firm he co-founded. It didn't directly affect Tempus AI,
Uh-huh.
but it makes you think, right?
Yeah, it highlights a key risk,
Yeah.
that concentrated leadership.
For sure.
While a strong leader can really drive success,
Sure.
their absence or any personal issues could have ripple effects.
Yeah.
It's something potential investors should carefully consider.
Yeah, and what about potential changes to Medicare reimbursement policies?
Oh, yeah.
That seems like a huge variable for any company in the healthcare space.
Absolutely. Healthcare reimbursement is a complex beast.
Right.
Changes to Medicare, especially for something like genomic testing,
Right.
could significantly impact Tempus AI's profitability.
Yeah.
They're walking a tightrope, hoping for favorable policies
Right.
while preparing for those potential shifts.
Got to be prepared.
Yeah?
Tempus AI also mentions the unpredictable nature of future sales,
Uh-huh.
especially to those large pharmaceutical companies.
Yeah.
Those contracts are crucial for their growth, right?
That's a common challenge in this sector. Pharma companies are cautious.
Right.
And their sales cycles can be long and unpredictable.
Yeah.
Tempus AI can't just assume those big deals will materialize.
Yeah.
They need a solid pipeline and a flexible strategy
Yeah.
to adapt to changing market conditions.
So another thing that stood out was their reliance on Google Cloud.
Okay.
What happens if there's a service interruption?
Yeah.
Their entire operation seems to hinge on this one platform.
It's a calculated risk.
Yeah.
Google Cloud offers, scalability and cost effectiveness,
Right.
but it also creates a single point of failure.
Sure.
Any disruption, whether it's technical issues or cyber attacks or even natural disasters, could severely impact Tempus AI's operations and revenue.
And of course, we can't forget the legal challenges.
Oh, right.
There's a recent lawsuit from Guardant,
Huh.
another player in the liquid biopsy space.
Uh-huh.
alleging patent infringement.
Ah, yes, the world of intellectual property.
Right.
Patent litigation is a costly and time-consuming beast.
Yeah.
Regardless of the outcome,
Right.
it adds another layer of uncertainty and risk that investors need to factor in.
Okay, so we've got this really complex picture,
Yeah.
ambitious revenue goals,
Uh-huh.
a mountain of debt,
Right.
reliance on these key figures and technologies,
Yeah.
and a legal battle brewing.
Right.
But beyond the risk factors, their filings also reveal some pretty interesting financial highlights
Okay.
that tell a different story.
All right.
Should we dig into those?
Absolutely. Let's shift our focus to those specific numbers and see what they reveal about Tempus AI's strategy, their growth trajectory, and their potential for success.
Sounds good.
All right. Welcome back to our deep dive into the financials of Tempus AI, Inc.
All right, so let's put on our financial detective hats and see what these numbers are telling us.
Okay.
One thing that really jumped out at me was that accumulated deficit of $2.1 billion as of June 30, 2024.
Uh-huh.
That's not exactly pocket change.
Right.
What's the story there?
Well, a $2.1 billion deficit certainly raises eyebrows.
It does.
But it's not uncommon for companies in growth mode,
Okay.
particularly in sectors like healthcare and technology.
Mm-hmm.
These industries often require significant upfront investments
Right.
before profits start rolling in.
So they're playing the long game,
Exactly.
hoping that these investments will pay off down the line.
Yeah, they're betting on building a robust platform, gathering tons of data,
Right.
and developing cutting-edge AI capabilities.
Okay.
The idea is that this will create a competitive advantage that leads to eventual profitability.
Makes sense.
They're essentially building a moat around their business, making it harder for others to replicate their success.
But investors are going to want to see a return on their investment eventually, right?
Of course.
How long can they keep burning through cash at this rate?
That's why those revenue targets in their term loan facility are so critical.
Right.
They need to demonstrate that their growth strategy is translating into real financial results, not just promises.
And speaking of revenue, they pulled in $492.7 million for the 9 months ending September 30, 2024.
Yeah.
Compared to $384.1 million.
Yeah.
During the same period in 2023.
Right.
That's a 28% increase.
Yeah.
Which seems pretty impressive.
It's a healthy growth rate for sure. It indicates strong demand for their products and services.
Right.
But to really understand the story, we need to look beyond the top-line revenue and see what's driving it.
Right. And we talked about their two main revenue streams, genomics and data and services.
Yep.
What do those numbers tell us about where Tempus AI is focusing their efforts?
Well, for the 9 months ending September 30, 2024, genomics generated $331.3 million.
Okay.
A 22% increase from the previous year. Data and services brought in $161.4 million. A 42% jump.
Wow.
So this suggests that while genomics remains their primary source of revenue, data and services is gaining traction fast.
Interesting. It seems like their bet on AI and data is starting to pay off.
Yeah.
At least in terms of revenue growth. But are they actually making any money from these services?
Right.
What about their cost of revenue?
That's the key question.
Yeah.
For the 9 months ended September 30, 2024, their total cost of revenue was $233.7 million.
Okay.
A 30% increase from the year before. Genomics cost of revenue was $181.3 million.
Okay.
While data and services came in at $52.4 million.
So their costs are increasing alongside their revenue.
Right.
That's not unexpected for a company in growth mode.
Yeah.
But it does make you wonder about their path to profitability.
It's the classic growth company dilemma.
Yeah.
You need to invest heavily to scale your operations and capture market share.
Yeah.
But those investments can eat into your profits.
Right.
It's a delicate balancing act.
But let's not forget those strategic collaborations we discussed earlier.
Oh, right.
Like the deals with AstraZeneca and Recursion Pharmaceuticals. Those are worth a combined $380 million.
Yeah. That's got to be a major boost to their revenue, right?
Those collaborations are significant for sure.
Yeah.
They provide Tempus AI with a more predictable revenue stream.
Okay.
And validate their data-driven approach. These deals signal that major players in the pharmaceutical industry see value in what Tempus AI is doing.
So these big partnerships are definitely promising.
Yeah.
But they don't magically solve their profitability challenges.
Exactly. While they provide a solid foundation for long-term growth, Tempus AI still needs to execute its strategy effectively and keep a close eye on its costs.
Okay, let's talk profitability then.
Okay.
They report something called adjusted EBITDA.
Yeah.
Which is a way of measuring their operating performance before taking into account things like interest, taxes, depreciation, and amortization.
Yeah.
What does their adjusted EBITDA tell us?
Well, their adjusted EBITDA for the 9 months ended September 30th, 2024 was a loss of $467 million.
Wow.
Compared to a loss of $124 million for the same period in 2023. A $467 million loss.
Yeah.
That's a pretty big hole to climb out of.
It is.
What's driving those losses?
Well,
and what are they doing to improve their adjusted EBITDA?
The losses stem primarily from their heavy investments in research and development, sales and marketing, and general administrative expenses. These are all necessary costs for a company building a complex technology platform and expanding its market reach.
It's that balancing act again.
Right.
Investing to the future while trying to keep costs under control.
Exactly.
But they're aware of the challenge and seem to be taking steps to address it.
Yeah, they are.
But how exactly are they planning to do that?
Okay.
Do they have a concrete plan? Or are they just hoping for the best?
Their filings outline several strategies. First, they aim to expand their customer base and deepen relationships with existing customers.
Okay.
Particularly those large pharmaceutical companies we discussed earlier.
Makes sense. Those big contracts can be game changers.
Yeah. Exactly. Second, they plan to leverage their data and AI capabilities to develop new products and services.
Okay.
They could expand beyond their current focus on oncology into other areas of healthcare where their technology might be valuable.
So they're not just sticking to one lane.
Right.
They're exploring other avenues for growth.
Exactly. And third, they're focused on optimizing their operations and improving their cost structure.
So becoming leaner and more efficient while still pushing for growth.
Right.
It sounds like a tough needle to thread.
It is. But they're aware of the challenge and seem to be taking steps to address it.
Okay, so let's circle back to those risk factors.
Right.
We've touched on some of them. But are there any others that are particularly interesting or unexpected?
The one that stands out is their dependence on Eric Lefkofsky, their CEO, founder, and chairman.
Yeah, we talked about this cybersecurity incident at Lightbank, a venture capital firm he co-founded. That incident highlighted the risks associated with concentrated leadership. It did. What if something were to happen to Mr. Lefkofsky?
Right.
Could the company even function without him?
That's a valid concern.
Yeah.
Tempus AI acknowledges this risk in their filings, stating that their success is highly dependent on Mr. Lefkofsky's leadership. His vision, industry connections, and entrepreneurial track record are undoubtedly valuable assets to the company.
But it creates a potential single point of failure.
Precisely. If Mr. Lefkofsky were to step down or become incapacitated, it could create significant uncertainty and potentially disrupt the company's operations and strategic direction. Investors need to be aware of this risk.
Okay. Another risk factor that caught my eye was the potential impact of changes to Medicare reimbursement policies.
Oh, yeah.
We know that healthcare reimbursement is a constantly shifting landscape.
It is.
How vulnerable is Tempus AI to changes in Medicare?
Well, as we've discussed, changes to Medicare reimbursement can have a significant impact on healthcare companies, especially those providing diagnostic testing services like Tempus AI. A portion of their revenue comes from Medicare. So any cuts to reimbursement rates or changes to coverage policies could affect the bottom line.
So they're essentially at the mercy of government policymakers.
To a certain extent, yes. They need to stay informed about changes to Medicare regulations and adapt their billing and coding practices accordingly.
For sure.
They also need to advocate for policies that support innovation and value-based care.
Sounds like a lot to juggle.
It definitely is. Navigating the healthcare regulatory landscape is no easy feat, but it's crucial for success in this industry.
All right, one more risk factor that I found interesting was their reliance on Google Cloud. And the risk of service interruptions. Their entire platform is built on Google Cloud. So what happens if there's a major outage or a security breach?
That's a significant risk that Tempus AI openly acknowledges in their filings. They state that any interruptions or failures in their IT systems, including those provided by Google Cloud, could impair and harm their business.
It's like putting all your eggs in one basket.
In a way, yes. However, it's not uncommon for companies to rely heavily on cloud providers like Google Cloud.
Yeah.
The benefits of cloud computing, scalability, cost-effectiveness, and flexibility are often too compelling to resist.
But it creates the dependence on third-party providers that is outside of their control.
That's the trade-off.
Right.
Tempus AI needs to make sure they have robust contingency plans in place to mitigate the risks associated with relying on Google Cloud. They also need to work closely with Google to ensure the security and reliability of their systems.
So they're walking a tightrope, betting big on AI and data while facing these significant challenges and risks.
Right.
It's fascinating to see a company operating at the forefront of healthcare innovation like this.
Indeed, Tempus AI is a company to watch. Their journey will be filled with twists and turns, but the potential rewards are enormous if they can successfully navigate these challenges and capitalize on the opportunities ahead.
Well, Stock Explorers, we've really dug deep into the financial details of Tempus AI. We've looked at their revenue streams, analyzed their costs, and explored those critical risk factors.
For sure.
It's been quite a journey.
It has. We've gained valuable insights into their strategic priorities, their growth trajectory, and the hurdles they face. But remember, this is only part 2 of our 3-part deep dive.
That's right. In the final part, we'll step back and synthesize what we've learned.
Okay.
We'll weigh the challenges and opportunities. And we'll leave you with some thought-provoking questions to consider as you continue your own research into Tempus AI.
That's good.
Stay tuned, Stock Explorers, for the grand finale of our Tempus AI Financial Health Check. Okay, Stock Explorers, we've taken this journey through the financial landscape of Tempus AI. We've looked at the revenue streams, we scrutinized their expenses, really dug into those risk factors looming on the horizon.
We sure did.
It's been a bit of a roller coaster, hasn't it?
It has.
We've seen this bold vision, this ambitious growth strategy, and how they're leveraging this cutting-edge technology to bet big on the future of personalized medicine.
Yeah, it's really something.
But we've also uncovered some, potential red flags.
For sure.
That massive accumulated deficit.
Right.
Their dependence on certain key figures and technologies. The complex regulatory environment, and of course that constant pressure of competition.
It all adds up.
So where does this leave us?
Right.
Is Tempus AI a rocket ship ready for takeoff or headed for a crash landing?
That's the question.
What should investors be thinking about?
It's the million-dollar question, and honestly, it's too early to say for sure. They're at a crossroads.
Right.
And their future hinges on their ability to execute their strategy effectively and overcome some pretty significant hurdles.
It almost feels like they're walking a tightrope, juggling chainsaws. While trying to navigate a minefield.
A vivid analogy.
But it captures the challenge they face.
It really does.
They need to find that delicate balance between investing heavily for growth and keeping costs under control.
For sure.
All while navigating this constantly changing and complex landscape. Okay, so let's break it down. What are the key takeaways from our deep dive?
Okay.
What should investors, and really anyone interested in the future of AI-driven healthcare, be paying attention to?
Well, I think the biggest takeaway is that Tempus AI is a high-growth, high-risk company.
Okay.
The potential rewards are huge, but so are the uncertainties surrounding their business.
Right.
This isn't a company for investors who are risk-averse.
So you're saying it's not for the faint of heart?
Exactly. Investors need to carefully weigh the potential rewards against the very real risks. And they need to understand Tempus AI's business model. Their reliance on data and AI.
Right.
This isn't your typical healthcare company.
It's a whole different ballgame.
Absolutely. Their success depends on their ability to gather, analyze, and monetize massive amounts of data. And to develop AI algorithms that provide meaningful insights.
Right.
It's a data-driven game, and Tempus AI needs to play it masterfully.
And they're doing all of this in a rapidly evolving industry.
Right.
The landscape of AI-driven healthcare is constantly changing.
It is.
With new technologies and regulations emerging all the time.
Absolutely. It's a dynamic and incredibly competitive space. And Tempus AI needs to stay ahead of the curve to maintain any advantage they might have.
Right.
They can't afford to become complacent.
And we've also talked about the importance of leadership.
Oh, yeah.
Especially given their reliance on Eric Lefkofsky. That's something investors need to think about carefully.
For sure. Any change in leadership could have a significant impact on the company's direction. It's a factor that shouldn't be overlooked.
And of course, those risk factors outlined in their SEC filings.
Right.
We've touched on some of the big ones.
Uh-huh.
But investors really need to read those carefully and understand the potential pitfalls.
Absolutely. Those risks are real.
Yeah.
And could materially impact Tempus AI's future.
Right.
Don't just skim those filings. Really dig into the details.
All right, so we've laid it all out on the table.
Mm-hmm.
The good, the bad,
Yeah.
and the potentially ugly.
Uh-huh.
What's the verdict?
Okay.
Is Tempus AI a buy, a sell, or a hold?
Well, we're not giving financial advice here. Of course, our goal is to arm you with the knowledge and insights you need to make informed decisions.
Right.
We've presented the facts, we've analyzed the financials, and we've explored the risks.
Yeah.
Now it's up to each individual investor to decide if Tempus AI aligns with their investment strategy and risk tolerance.
But before we wrap up, we want to leave you with a question to ponder.
Okay.
What would it take for Tempus AI to achieve sustained profitability?
Right.
Is their current strategy enough to get them there?
Think about their revenue model, their cost structure, the competitive landscape, and all those looming risks.
Right.
Consider the impact of potential technological advancements, regulatory changes, and the ever-evolving market dynamics.
And ask yourself, do you believe in their vision?
Yeah.
Do you believe they can execute it?
That's a good question.
It is. We encourage you to keep digging, explore those SEC filings in detail, and continue your own deep dive into the fascinating world of Tempus AI.
It's a fascinating company.
It is. That's it for this Deep Dive Stock Explorers.
Thanks for having me.
Until next time, happy investing.